Research at Julius Baer, joining us on the show. Hi, Mark. A very good morning, and thank you so much for your time. And a lot's happening with respect to the Indian markets, Mark, because we have that big GST bazooka from the government itself. A lot of sectors are indeed having a good time, and the expectations that the earnings might improve in the times ahead. But along with that, it's the macro data with respect to GDP, which is now very strong. But the other fact of the matter is that markets not garnering that FII interest right now. We were just looking at some stats wherein FII long position is at a 2-year low. What are your thoughts, and how do you see the Indian market set up right now, Mark?
I'm not really the right person to ask about FIIs. I know I look like one, but I'm only one of thousands.
No, I'm just
so I like
wanting
India.
to know. Sorry. I'm just wanting to know, Mark, what the investors are interested in when it comes to the Indian markets, and how are the interests looking like?
Well, I think there's a lot to be interested in. India, it is a very large and liquid market, which most emerging markets are not. So you can easily get in and out. And it is a very large and uncorrelated economy to the American economy. So to my mind, it is a natural place to invest for a global portfolio. And to answer your question, I don't really know why the FIIs are not buying it. One thing that pops into my mind is that there is a resurgence of interest in China. And really, those are the only two big emerging markets in the world are China and India. So there is an alternative now, which there really wasn't from around 2019 till last year, because most portfolio managers viewed China as uninvestable, as the infamous saying went. And now they're changing their mind on that. So I suppose that one thing that pops in my mind is that China is taking up a lot of the bandwidth that is occupied by the emerging markets.
Sure. Okay. But does it seem like more of a structural shift, Mark, to China, or is it still seeming very tactical in nature?
Yeah, so they've been calling it tactical for over a year now. I must confess that when we began to like China in late 2023, we called it a tactical opportunity. But the more the Chinese market goes up, the more that it looks more structural, doesn't it? It's still very far from its previous highs. It's not expensive. It has an enormous technology ecosystem that nowhere else in the world has apart from the United States. And it appears that China and American relations are mending. So you put all that together, I think you're right to say it's probably more than tactical now.
Yeah, I mean, the fact that it's lasted for almost a year now, I think one can safely say that it doesn't seem just tactical anymore. But Mark, what about India? And, given the fact all that the government's intent is, and the way the government has actually been sort of, giving that fillip to the consumption economy. India was always a consumption-driven economy, but more so now. And from an investment point of view also, would you say that the go-to should be the consumption basket?
One of the go-tos should be consumption. I do believe that. It was the case before the adjustment in the GST buckets and the cut in income tax, and certainly even more the case now. I think that the economy was soft last year, partly self-induced through the Reserve Bank keeping rates high and reserve requirement ratios for banks high, and the government spending less on capex. But we know that government capex on infrastructure is going to go up this year. We know that interest rates have been cut, that reserve ratios have been cut in the banks. And to top it off, now we've got these changes in taxes. To my mind, yes, the consumer is a natural benefitor of all those things.
Mark, you always like the Indian financials. Would you say that perhaps the best derivative derivative to play the entire consumption boost, and the move from unorganized to the organized sector within consumption continues to be financials.
Yes, they're a good proxy for the economy as a whole, not just consumption, but I like to say that banks are the heart of any economy, and so when the economy is doing well, the heart is doing well, and I believe that India's economy will do better in the next year or so, in part because if you look back in history, whenever there have been problems for India, starting really with the balance of payments crisis, when was that? Over 30 years ago, 34 years ago, and then seems once every 10 years there's sort of something that happens. So in the early 2000s and the early 2010s, but the net effect was that the government became even more liberalized and more pro-business, more pro-market. I think we're seeing that play out exactly today. So as much as the tariff news is optically not good, I think the net effect of it will be a positive.
Coming in on financials, but Mark, what about autos? Because for the consumption basket, there has been a big bazooka on the GST front with respect to the cuts on the taxes with respect to the auto companies, passenger vehicles, two-wheelers. It's coming across the board. What's your take on autos right now?
Yes, that would be fitting in, as you say, naturally to the consumption story, given the big cut to taxes for autos. So would insurance, by the way. There's a whole bunch of things that benefit, and fast-moving consumer goods. So, yes, absolutely, it fits into the story.
Fresh additions that you have made post this GST announcements, because it's not just autos, it's the FMCG, select dairy companies, select electronic companies. They are going to be the biggest beneficiary of that.
Yes, I think you're right. Anything consumer related will come out of this probably stronger than before the tariffs unexpectedly became a big issue for India. And on the tariffs, I might add that we don't really know what Donald Trump wants. It could be something related to Ukraine and the Indian purchases of oil. It could be some breakdown in the personal relationship between the Prime Minister and Donald Trump, or it could be access to the Indian consumer that the Americans want. We really don't know which one he cares about. But the good news is that if you look at all the other countries which have been through this, and there's a long list, he can change his mind very easily. So the example I use is the high-end chips that the Americans have. Initially, he didn't allow companies like NVIDIA to sell them to China. And then one day he just said, okay, well, you can go ahead and sell them, but you have to pay the government 15% of your revenues. So I'm pretty sure that the bridges can be mended. India just has to be creative in how it approaches this. So all we need to do is give Donald Trump a win.
Oh, yes, Mark, I really take that point, because change of minds is what we have seen coming in from Donald Trump in his latest comment as well, where he's actually saying that there's nothing to worry with respect to India-US relations. He'll always be friend with Prime Minister Modi, and on the contrary, it's Prime Minister Narendra Modi who has made a social media post saying that he deeply appreciates and fully reciprocate President Trump's sentiment. But taking cues from that, Mark, do you believe that this signals that maybe it's a time to look at some of those export-related and beaten-down sectors, be it the case with pharma, be it the case with IT, where now we are getting to understand that there's some bit of an uncertainty with respect to tariffs?
Well, I've been thinking for some time that the IT stocks are too cheap. So if you look back in history, for some strange reason, IT and banks tend to do the opposite of each other. So when banks perform well, IT doesn't perform well, and vice versa. So we know that banks have been very good this year and IT's been terrible. I believe we're reaching at some point of inflection. I earlier just told you that I like banks, so sort of contradicting myself, but when stocks are down more than 20%, you should start taking an interest in them, and the IT space is down 20% from the beginning of the year.
Mark, that's the list of what you like, but what is it that you would steer clear of when it comes to Indian sectors?
I don't have any strong dislikes at this point. Can't say there's anything that strikes me as being grievously mispriced. I can't say so. So I think it's been an efficient market. The things that have been good and they've sort of gone up, like the banks, and the things that have suffered because of the trade war and AI, so the IT sector and pharmaceuticals, they've been derated. I don't see anything that's very mispriced.
Right. Just to the point, Mark, that you were making earlier, does it really seem like there is any alternative for Indian IT services? Because it seems like IT services could very well be spared. I mean, technical factors aside, but, no other country has the kind of scale or the skill that India brings with its IT services.
I hate to say that I agree with you, because ultimately nobody is irreplaceable. There must be some country in the world that could do this, but it would take many years, not just a few months, to make that transition in education and infrastructure. The American companies have invested a lot of money and a lot of time building up their relations with Indian IT companies. They can't just flip over to Vietnam or the Philippines or someplace like that. I do think you're right about it.
Mark, great to have you on the show. Good to get in your thoughts as always. Let me just revisit what the market is up to. Well, we started off quiet. We're still pretty quiet, around the 24,800 print for